And the Santa Rally is also here as the Dow and S&P hit record highs on a shortened Christmas Eve trading day. Let's ask Flynn Zito Capital Management, Doug Flynn, what that means. Doug, Merry Christmas, Happy Holidays. Good to see you.
Merry Christmas, Santa. How are you?
I'm great, thank you. First, tell me what's behind today's Santa Claus Rally.
Yeah, so the last 5 trading days of a year, plus the first 2 of the new year, are the Santa Claus Rally seasonal barometer, if you will, and people love it for a couple of reasons. One, it's festive, but 2, it's more than 75% of the time positive, and not a lot of seasonal barometers have that high a percentage of positivity. So, of course, it's not always positive, but it is very positive a lot of the time. And so today started off very well into that with a positive run to put us at all-time highs in the market. And so hopefully that will roll into the rest of the time into the new year and give us that Santa Claus rally that tends to happen.
We'll take that. We love hearing that. You and I have talked about Federal Reserve Chair Jerome Powell a lot in the last year. There's a new Gallup poll out. He's been voted the most favorable leader in the U.S., the rating of a 44%. That determination, again, coming from many Americans based on the Gallup poll. Why do you think the Fed chair is outperforming so many elected leaders out there? I mean, look at the competitors. We're looking at Mark Rubio, the vice president, RFK. What's going on here?
Yeah, it's interesting. And so basically the Fed chief has outscored the president of the United States on his approval rating. So it's higher than Trump's, and I'm sure Donald Trump doesn't like that. But it is a little bit surprising to have a central banker have that high a rating. Most of the time we don't think of them as one of the people that we want to think positively about. And this comes after an onslaught of the political attacks on his interest rate policy and calling inflation transitory when it clearly wasn't, when inflation was up to at 9%. And so with all that, people are still, I think it shows that people are seeing through all that and sort of holding that the Fed is independent and that it is not going to be taken with all those political attacks, and it's going to do its job, hopefully, for the good of the country. I think that's what it's showing so far in light of all of those attacks, that he's still holding that positive.
What's interesting here is that these approvals are coming from independents, Democrats, Republicans. Is this just about inflation cooling or about the Fed staying independent and predictable in a very unpredictable world, as it seems?
I think, look, you can make arguments that the interest rate should be lower. So I think there are arguments for that. I think that we want to have the Fed being independent, yet at the same time, they always say they're not political. But in a lot of ways, they are political. So I think it just shows that nothing really has changed in light of all the pressure from this president and the fact that they're going to do their thing, right or wrong, agree or disagree. They're going to do their thing. And that's what you want. And hopefully with a new person that's going to get put in from Trump in a couple of months, hopefully they'll also do the right thing. That's really what we need. That also gives a lot of positivity to the rest of the world in looking at the U.S. and our central bank policy.
I have to ask, Doug, does public approval actually matter for a Fed chair, or is it just background noise?
I don't think it matters that much one way or the other. Most of the time, you never even hear their name, and most people don't know who they are. But in this case, he's sort of brought to light with all of the craziness and all the things that have been said about him, and the fact that he's been wrong a couple of times. But a lot of Fed chairmen are wrong, so he's been right, he's been wrong, and so nothing really has changed. I think that's the takeaway here.
I do want to look at the Fed's timeline this year. Months of holding steady, followed by 3 straight rate cuts. Do you think Powell thread the needle or take the pressure off too late here, Doug?
Perhaps. I think, look, they could have lowered rates a little bit sooner. They could have raised them a little bit sooner when inflation really took off. And so, that's in hindsight, that probably should have happened. You could make the argument that our interest rates are still too high. And so maybe you will get those 2 additional rate cuts. I don't know that you're going to get it in January. So they're taking, look, it's a committee of 12 people. The Fed chairman can influence the rest of them. They don't have the overall say-so. They can't just deem it so. So they have to coalesce and get people to agree with them, and not everybody always does. So, there are signs that the rates should be lower. That will go a long way. That is part and parcel for the additional growth we need. The lower rates on the mortgages, even though they're not directly tied to it, it just puts more money in people's pocket. And I think that's really the next leg to get the things going here, because the consumer is starting to teeter a little bit.
Yeah.
Wages, aren't keeping up that great. So that will hopefully move things a little bit forward. So that's where we are right now.
We'll see what 2026 has in store. Happy holidays, Doug. Always good to see you.
You too. Thanks.
Thank you.